Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, checking in on gold, the dollar, and miners. Starting off with the dollar, we have a bear flag being confirmed with lower lows and continuing to drop. The dollar's in trouble. And looking on a longer term perspective here, looking on the weekly time frame, we're down at the lowest levels we've seen in quite some time. The year low is being hit on Friday, and this is the key support level that I've been highlighting for a couple months at this point. 91.92. Break that level, and there is a lack of support down from here. The weekly time frame, however, is still oversold. So if we were to break this level in the near-term future, I wouldn't expect an all-out dump. If we were going to get that, this RSI on the weekly time frame would really be down in the low 20s or even the teens, which that probably hasn't happened in a decade or more. So that is unlikely to happen. Odds do not favor that, but it is possible. We've seen the dollar down here on the weekly RSI in the low 20s before, back in 2007, and obviously that was part of the financial collapse going on there, so that was a significant event. But it happened again in 2002 and 2004, 2005, so it's certainly possible is the point. But I just wouldn't expect an all-out dump if in the next 2-3 weeks, really the next month, if we break 91.92 without seeing a small short-term bounce before that happens. So this weekly chart has just been one big line with multiple bear flags. A weak bounce attempt, a dump, weak bounce attempt, dump. Just recently, a bear flag of a weak bounce attempt and a dump. If you were to draw this on the daily time frame, you would have your trend line of support, and that broke and gave plenty of heads up and then acted as resistance on the back test. So an attempt to turn around the trend, it failed, and then we dump. So what we have with this dump is the precious metals benefiting. And gold was in a daily equilibrium pattern with inside bars tighter than I've ever seen gold before. And that was 1, 2, 3 inside bars in a row. And then Friday, we had Yellen speaking at 10 a.m. Eastern, and we had all kinds of volatility, tons of fake outs. And the ideal play would have been a straddle with both bearish and bullish positions on gold or on miners, and allowing you to benefit from all this volatility. So you would sell your puts on the dump, and then you would sell your calls on the recovery, and that would have been a way to profit in both directions. Obviously, it would have been a bit of a tricky trade, and the traders out there that did make that trade and benefit definitely have experience, because, again, that's not just a simple trade there. That's looking both directions and capitalizing on that. So in the end, the bulls saw some nice follow through and a save from the reaction. We had the dump. Let's look at it on the shorter term time frames. The dump was before Yellen started speaking. The dump was at 9:30, and then when Yellen began speaking at 10, the recovery occurred. And we're getting very tight here. We can see our high, our low of the dump, lower high on the bounce, higher low, lower high, higher low. And right now, key resistance is up at 1293. And key support is down at 1289.84. So the range that I would be watching just in the short term on the 15-minute time frames as we begin trading again on Sunday would be looking at this channel right here on that 15-minute time frame to see who's going to come out on top. But it's really easy to be looking bullish on gold as long as the dollar is showing us all that weakness. So here's that daily time frame with the bulls recovering a bit, higher lows and higher highs. We just established that new higher low on the daily time frame, and we'll see if the bulls can get over 1300 to see a new higher high. Weekly time frame for gold, trying to get over that level. You can see we have not closed a weekly chart above 1300 resistance, a weekly candlestick in quite some time, but it is the highest weekly close that we have seen in 2017, so certainly notable. So checking in on the miners, how are they performing? They had a bull break a day early, and that was a little bit of a heads up and definitely played out for these bulls with some further follow through of higher lows and higher highs. We can see that GDX here is rejecting from the daily upper Bollinger Band 1, 2, 3, 4, 5 times that we've tested it now. So that is a key resistance to update every day because the price struggles at that level. We are still very strong with higher lows and higher highs. We've been in a nice uptrend for the past 2 months, finally getting direction, as it was not clear what direction was for a period there in July. So now on the weekly time frame, we're breaking out of this tight channel and looking to go bullish. We have to get over 2386 to break this lower high pattern. I've got our high, lower high, lower high, and it's still another lower high unless we can break 23.86, and then we will start forming higher lows and higher highs, and that will be a shift in momentum and a shift of the trend. So the bulls got over all of these moving average resistances, and now it's just previous price history standing in the way of a trend change. You can see the Bollinger Bands were descending. They're now leveling out and will begin ascending if the bulls can continue this momentum. The junior miners not as strong, but definitely seeing the same kind of upside. We do still have resistance where, look at GDX. We're at the highest price last time we were at this level was back on June 7th. And if GDXJ was at that point back on June 7th, we would be up just a little bit higher. So not a significant difference, but we still have not broken resistance from the end of June, which GDX already has. So resistance is 34.14 and 34.21. And the bulls just need to keep these higher lows and higher highs up, same as GDX. Weekly time frame does not have as clear a bull break as well just yet. So again, this is another scenario where I would rather be in GDX, but both names are slightly bullish. And the key resistance here, 35.05, to break the weekly lower high pattern and to shift that momentum back to the GDXJ bulls. So again, as long as the dollar is weak, as long as gold is strong, these miners are going to see some upside. We're not seeing huge moves like we did back in the past. That volatility and volume has gone away, and we can see it in the interest and the views in these videos, and there's all kinds of little things that you can see that as the trading opportunity decreases, people move on and find somewhere else to trade that has significant opportunity, and right now the miners don't really have that. But either way, gold 1300 turning into support would continue this momentum and certainly give confidence to the bulls going forward. I appreciate you watching and hope you have a good rest of your weekend.